We'll see if this is working. Just going to do some audio and video checks, and we'll get started here in a minute. Awesome. Sounds good. It looks good. What is going on? There we go. Welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. Just wanted to do a short Sunday live stream, go over Bitcoin, do somewhat of a mini indicator special. Thank you all for being here. Hope you're having a great weekend. I got football on in the background, watching 4 different games at once. And once we get to about the end of these games, I'll for sure have to be going because that's when the game's on that I'm most interested in. But wanted to take a look at Bitcoin through some different lenses. As y'all know, we've been talking about how these negative Novembers we've had have coincided with market bottoms back in 2022. That was the bottom of that cycle, and 2018. Now, we also had 2019, which coincidentally enough coincides with the whole switch from quantitative tightening to easing. We won't get as much into that today. We're just going to be more indicator focused. We've been talking a lot about QT, QE. I like to switch it up each week and focus on a different theme and put all the data together because sometimes I think for one, it gets boring to talk about the same thing over and over, but it's important to take a look through different lenses. And here at Market Psychology, that's the whole point. We want to be able to expand our perspective. And I like to make this a conversation with y'all as far as where we think the crypto market's going. As you can see, extreme fear. We are still way down here. And just historically, let's go back and take a look at a couple of these extreme fears. Of course, this is before the tariff scare, so it was a leading indicator, and extreme fear can be a leading indicator. Back in August with the yen carry trade unwind, that happened pretty quickly, so this indicator is 1-to-1. Last time before the cycle started, we had extreme fear was the summer of 22. The lows in Bitcoin came later. And this time in extreme fear, that was right after the classic 4-year cycle top. Of course, we had extreme fear that summer as well because there was already alt season that took place. As far as zooming in a little bit on extreme fear, you could see, yes, we're kind of just ranging higher highs, higher lows. Hopefully this starts going up into neutrality territory sometime soon. As far as the rainbow chart, log regression, you can see it's right at that area between the light green and the teal zone, if I can get it to show. I don't know why it's disappearing sometimes. The teal zone is between 69 and 90K. And we've been talking about 69K a little bit because that's where the 200-week moving average is. We can go to the chart and just show that really quick. Turn on our moving averages, go over to the weekly. By the way, that's the 20-day moving average. Bitcoin got rejected off yet again. But if we lose all this, if Bitcoin isn't able to break above roughly 95K, then we may start to challenge these supports, the 100-week, the 1, 2, 3, 6 Fibonacci extension, and the 200-week moving average. It's coming up to the former all-time highs. So the 200-week moving average, very close to the all-time highs. And I think someone pointed this out before that when the 200-week, this is a dark blue line, I've heard someone mention it, that when it gets above the former all-time highs, that's when a market or a cycle peak or a peak in general is close. So you can see the dark blue line not too far away. And I mean, of course, this is going to happen because price is going up, so it's going to pull the moving averages up. And once again, we see the 200-week really close to the former all-time high. So something to keep an eye on. Now, one of the things I've been liking taking a look at here a bit is the liquidation heat map. It shows where shorts and longs are being put in, and I try to compare this where the moving averages and the Fibonacci levels are, because you can see where some of the stronger areas of support and resistance will be. But you see there's a bit of short stacking up there at 95K. And if we can't break through that, I mean, there's not a lot to the downside. We can zoom in here. Let's go to the 1 month and see what we got. You can see there's some level of support at around 87K. So keep an eye on that. If we go to Bitcoin and the daily and just take a look at 87K and see where that's at, 87K is roughly right around here. So yeah, some areas of support, I would kind of line it up where this other low is. And if we get much lower than that or start coming down under 87K towards 81K again, I'm going to be more concerned. And I will say, just overall, as far as Bitcoin goes classically, anytime we get these big downward movements and a little bit of an ascending channel, I get worried, because I like the descending channels more so when we get upward movements, such as when we had here. Move up, descending channel, move up, descending channel, move up. And now when you move down and you get those ascending channels, usually not as great. So just something to keep an eye on. We'll see if Bitcoin can put in a reversal pattern here, but we will see. One of the other charts I've been looking at a bit lately is just this comparison of halving to halving. So the halving cycle comparisons after the halvings, you can see that as far as this cycle is concerned, it is the most flat, which makes sense. And, we talk about this in the log regression, how we have the X value of time, the Y value of our log scale, factors of 10. And that over time within a log regression, you are going to get more flattening, more stretching. The former log regression chart that they had to make corrections to the one I was just showing you, you could see how those tops just kept getting lower and lower. So I think they're probably going to have to do that again. You can see how these tops are getting lower, and whether or not this is the cycle top. And by the way, cycle top to me is the high between the halvings. I don't think we've had a cycle top yet. Even if we have the classic 4-year local top, I don't believe this is going to be the cycle top, which is the highest points between the halvings. Going back to this right here, I believe that high point might be more right translated as far as this cycle is concerned, and that would line up with the 2019 comparisons and alt season. But yeah, overall, you're going to get more of these stretches, and I do wonder if this log regression, like some of these darker red bands, need to show more of a flattening out horizontal type movement. Any other things I want to take a look at before we get into the charting and the indicators? Just something to keep in mind is that we do get a lot of pullbacks on our way to the cycle tops. Now, like I said, monetary policy wise, what's going on with the Fed right now, moving to quantitative easing away from quantitative tightening. Last time that happened was back in 2019, back in here, and Bitcoin went lower for a little bit. Of course, we had COVID. We'll get into that in the charts in a little bit. But as far as last cycle is concerned, monetary policy wise, we would be about right here, I believe, somewhere right in there. So, yeah, we'll see what happens with the charting in the future. And I don't want to take a look at that. Here's what I want to show you. One of the things I think there's a big split in the crypto community as far as analysis goes right now. It's something that we've been chewing on together, and that is reconciling the difference between the 4-year cycle people and the monetary policy people as far as the flow of money. There's no denying, I'll show you on the charts, that we are in phase 2. The flow of money has us right here. And as far as our last cycles, 2017, the cycle top, we got in alt season. 2021, believe it or not, the cycle top did not come with alt season. If we go to one of the charts here, this was when we had alt season in April 21. We had two cycle tops that were even higher after. That was November of 21, that was higher, and March of 24. That was actually the very highest price between the halvings there. So something to remember. I think if we do, let's see here, yeah, I've been playing around on this website. By the way, this is um, bitcoincounterflow.com. Great site. And this is showing, by the way, how we get these lows as far as the distance from low to low comparison. This would be saying that we should be looking, predicting that we should be looking for lows in October of 26. So just put a pin in that in the back of your mind after having comparison. There is another chart. No, maybe it's a halving cycle contrast. Yeah. No. I think after having comparisons, probably the best one. Back at what I was talking about before, as far as the money flow and where we get those tops. Again, we have a big difference between the 4-year cycle people and the monetary policy people. I want you to focus on this pink line right here, magenta, 2020 to 2024. We had alt season right here. Again, I'm showing you the pink line. There were more highs here. This lined up with the 4-year cycle, and then we got even higher there. So do remember the cycle high. Last cycle showed us this. The cycle high does not have to coincide with alt season. So there's this battle going on right now. People believe that crypto is over and it's done. I don't believe it's done yet as far as alt season. Alt season did not coincide with the 4-year cycle top, and that's okay because last cycle alt season did not coincide with the 4-year cycle top either. So, these 4-year cycles that people like to point out, this was December 2013. There is the cycle top between the halvings. November of 2017, that was the cycle top between the halving. That's when we got our alt season and the creation of all these alts before it. But then remember, last cycle, that was our 4-year cycle top, but alt season was earlier and we had another top later. So with all that being said, I don't believe that alt season is out of the picture at all. You can see that by taking a look at Bitcoin dominance. We had that local peak. It turned bearish recently. That happened in 2019 as well. Remember, we're talking about monetary policy here as far as that when that changed. And then we also have, excuse me, we also have Ethereum Bitcoin. And you can see how Ethereum's pairing against Bitcoin, when it starts going up and rocketing up, that's when we get the alt season. That was April 21. We still have some bits of resistance to contend with. And that 0.21, that means that Ethereum is 21% that of Bitcoin as far as market cap is concerned. A lot of YouTube channels that talk about crypto ignore market cap. They don't believe it exists. On this channel, I believe it exists in a very real way. So I will not be giving you ridiculous predictions saying that Cardano is going to $5,000 or XRP to 10K. I'm going to say realistic expectations, but Ethereum is 21%, the market cap of Bitcoin. So let's get into the Bitcoin chart. Let's take a look at it through different indicator lenses and see what we got. Mike Max Bros, thanks for being here. Never seen crypto this quiet. Thanks for the content. Appreciate the nice comment, Mike. And you know what? That is an important indicator in itself. I was actually just taking a look at my analytics today for my YouTube channel. And, it would go as you expect that we get the lows or we get further lows in times that the views are down when people aren't talking about it as much. So those are the times to look at accumulating, but you want to be smart about it too. We don't want to just buy falling knives or anything like that either. So again, we're going to go through different indicators here in Bitcoin, do a mini indicator special. I'll talk about why I have that yellow box here if you guys aren't familiar. But Bitcoin today, right now, you can see that we are in this wedge formation. Someone on the stock video asked, the stock video I did on Friday, is this a bear flag? My head leans towards this being a bear flag. In all honesty, you can see how the 20-day moving average, we're losing it again. You can see how we never got through 95K. That's where the shorts are stacking up. We can see this on the liquidation heat map. That is a big wall or ceiling, if you will, that we need to get through. If Bitcoin gets through this 95K, there really aren't a lot of shorts until about 116K, believe it or not. So 116K, there we go, is all the way up here. We can see where some of these are stacked up. So 95K is the first line in the sand. And I would agree, this does look like a bear flag to me. But you know what? Anytime we get lower prices, I'm not changing my strategy. I accumulate further at lower prices. And, just for comparison, in the past, how many times has Bitcoin been at its 200-week moving average? Let's put on our bear hats, shall we? And just let's agree with the 4-year cyclists and the bears here. And the 4-year cyclists, so far they're correct that we did get a local top, a major local top around that 4-year mark. But let's say this is a bear flag and we come down to the former all-time high around 69K. Remember, that's also where on our rainbow chart where the teal area bottoms out around 69K. Right? This would be at the 200, the dark blue 200-week moving average. How often has Bitcoin been at or underneath its 200-week moving average? Well, this prior cycle, or since the bottom, we were down there. COVID, it took it down there. Now remember, monetary policy, QE changed, or the Fed changed from QT, quantitative tightening, to easing back here. You can see that Bitcoin bottom here at the 100, then we got COVID. So I don't know if we would have saw the 200 without the COVID crash, but remember, the Fed just changed. They just flipped to QE from quantitative tightening, or the absence of QT is QE. So, but back to the 200-week moving average, 2018 we were here, and then of course before. So the point I'm trying to make, guys, is even if it's bearish, a lot of people, they're going to be leaving their interest in crypto. They're going to say, you know what, crypto's going down. I'm not interested. Guys, that is the time to be interested, because if you liked buying crypto assets here, but you don't love buying crypto assets here, I am questioning you and what you're doing here in the first place. You have to stick to your strategy even when it's bad so you can reap the benefits when it's good. I'm sure that there was a lot of fear back here, and I know there was because I was there. I've been in crypto since around the summer of 2017. So there was a lot of fear. There was a lot of lack of interest. But you know what? If you bought those times, the extreme fear and the lack of interest, you would have been getting crypto at the best discount prices. So if we do have a bear flag and we do break down that 100 and 1, 2, 3, 6 and go lower, I am not scared. I am not worried. I am accumulating at those lower prices. And of course, I'm not just going to buy as soon as we hit it. We need buy signals. We need confirmation. If you want it to be very simple, you can just put on a buy signal indicator and say, you know what, the first weekly buy signal after we go lower, that's when I'm going to buy. You could do that and you'd be buying dang near the absolute local bottom. So again, I'm not scared of the 200-week moving average if Bitcoin is to go down to lower. Let's run through some other indicators. Of course, you see how I have this Fibonacci retracement drawn from our prior high to low. When we look at fib extensions, we take our Fibonacci off log, and that is what we have here. The 1618 is right at 102K. That has been resistance before. That yellow box, this is also where the bull market support band would be. Where is it? Here we go. The bull market support band, as well as the Hull Suite indicator. If you're like, what the heck is the Hull Suite? The Hull Suite indicator, this ribbon, matches up with the moving average convergence divergence, or the MACD. So if Bitcoin is all of a sudden reverse out of this flag pattern, these are some of the areas to say, you know what, if we're going to really be bullish, we got to get through those areas. And so I just put that yellow box there because if Bitcoin, if it is to show reversal, it's got to break through this yellow box. Otherwise, we're forming a massive head and shoulders, which you can clearly see. Shoulder, head, shoulder. So that bull market support band, even the MACD line, we talked about where the next ceiling of shorts would be, which is at 116. That's right where the MACD line is again. So I'll show you the most even bullish scenario. Bitcoin could go up to 116, come down, and then we could, again, measure just from neckline to the top of the head. And you could say, you know what? Bitcoin would then have a measured move somewhere down to the 60K, maybe even 50K area. I'm not saying that's going to happen. We're playing with a lot of what ifs here, but that would be a local bullish scenario where if we get up here and we don't break bullish based on the indicators, then we could see some much lower prices that could, again, as we talked about on this chart before, I do like this low to low comparison. The Fourier cyclists are saying, you know what, October of 26, that's going to be the time to buy. Guys, I don't know if that's true. I don't like getting into the pattern and prediction game too much. We'll see if that lines up. Maybe there is a local low here, whether it is the cycle bottom or not, who knows. But just a little nugget to keep in the back of your mind. I think that would be a bearish scenario, even if we got a bit of a bullish flip right here. So something to keep in mind. Also, as far as putting on our bullish caps, these are the areas to get above as well. So we could move this yellow box if we wanted. But 116, that is where Bitcoin, the MACD, would have to flip in order to turn bullish around 116, which is where where our shorts are piled in. You can see this on the liquidation heat map. 116, that whole sweet band. Again, this lines up with the MACD. Anytime the MACD is flipping negative, we're getting under the whole suite. If we're getting above it, you see how the MACD flips positive, all right? And it's pretty close. So it flips positive when we break through this band. So you see for the MACD, the first time in a while since we started this down move, we are getting a light red box. That's good. But if we're to see the MACD turn green again, this is the area to get above, which lines right up where the next bit of shorts are stacked in. So the MACD, always a great indicator. Curious how this looks on some different time frames. I mean, I don't love that. Here's on the monthly. This is as bad as you could expect right there, but all because it's bad on the monthly. Let's zoom way in here. This was 2019, again, when monetary policy flipped from quantitative tightening to easing. You can see that was short-lived. It didn't have to be the end of the world. So once the blue line breaks above the orange line, that's when you get confirmation. So, right now we've just started a macro bearish trend. Now the hopes are this is more flat instead of something like this where we break down, go sideways, and then tank. You would be hoping more so for something like 2019 where we kind of chop sideways a little bit and then break up and through. So that would be the hope on the monthly time frame. There's a little bit of hope here, but again, no confirmation. So I'm not ready to say that we are done being bearish yet. We need that confirmation. Let's just go through a bunch of these different indicators and just see. Maybe I'll do the indicator special this week because some things have changed since we've last talked about this. As far as the Aurora indicator, this shows us how we're still saying bullish. We've gotten underneath it. That's typically not a good thing. As you can see, prior times we've gotten underneath just leads to further downside. But again, 2019, there was more chop. So you want to see us start getting into those green bands again. The green bands would be between 94 and 103K. And you can see that's where that yellow box is lined up. So I think to be bullish at bare minimum, we need to visit that yellow box there on the chart. All right, let's go to some of our next indicators. And if you have any requests or things you'd like to talk about, please leave a comment below. Let's see. We did Aurora. I want to take a look at Bollinger Bands. Have not taken a look at these for a hot minute. So we talk about this. When Bollinger Bands squeeze, we get a big move up or down. We have a big move down And the Bollinger Band, we've got underneath it. We're finally in it again, but this thing is down. So I'm looking for the Bollinger Band to flatten out a little bit. But yeah, right now that is just bearish. But it is a good thing that we've gotten back into it. Bubble risk indicator. Remember what I talked about earlier in the video, how when we've had those cycle tops between the halvings, the bubble risk is way up. Now, this is 2024. This cycle, the highest the bubble ever was 50, which is just nothing near any of the euphoric tops in the past. So again, I believe that we can have an alt season that might be right translated instead of left translated. If you're like, what the heck does this guy mean? Remember, the 4-year cycle top and alt season came together right here. The 4-year cycle top did not match with alt season. We had alt season earlier last time, and this top was higher. This was the actual highest mark for Bitcoin between the halvings as far as last cycle. So when we get another run at a cycle top, it could be where alt season takes place, but it does not have to take place at those 4-year cycle tops. That's been proven, and we have not had that euphoria that usually precedes an alt season. Actually, before I get away from this, case in point, we had euphoria here. This was a bubble top indicator, and this is where we had alt season. It wasn't here, and you can see how much lower that bubble top is. So yes, this was a 4-year cycle top, but again, we're looking for euphoria. We're looking for a massive reversal. You know, times were really dark here during COVID, and then the money printer was really turning on. The Trump administration, whether you like them or not, they want to turn on the money printer, cut rates very low next year. There's going to be a switch of Fed chairman, even rumors of more stimulus checks. All those things would be tailwinds for a euphoric type of move. So something to keep in mind. I think 2026 is going to be very crazy, very volatile, very choppy. But knowing that, that's why I have a strategy that I will strictly follow because it's going to be tough. It's going to be tough in 2026. I already have a strong feeling about that. All right, let's move on to some further indicators. Darvis box. This one, yeah, to get back in the box, we would have to, I mean, this thing's probably going to come down a little bit soon as well, but the Darvis box, the lower end is 102K. So could this be one of those reversal indicators saying, you know what, we got way underneath it, and I'm sure the Darvis box is looking to do something like this, but opposite. And I am curious, you know, how long underneath does it have to go until it just finally drops? We do not have any of that yet. So maybe that's still an indication that it's possible for Bitcoin to move back into one of those areas. That'd be about 103K. 103K. Imagine if Bitcoin all of a sudden jumped up to 103K, how quick the sentiment would flip out there for the crypto market. It would flip very fast. Don Chain Trend Ribbon. This is an important one we took a look at a few weeks ago. I think I am going to do an indicator special video this Wednesday because we are seeing some differences coming up here. And right here you see we have started a new trend. And these trends can go on for a bit. So again, going back to fear or even seasonality, fear showed us this, but seasonality as well. When we had very negative Novembers, in December, this was a local bottom in 22. 2019, we talked about that, the monetary policy flip. 2018, that was the cycle bottom as well. But these trends can be negative for a while. So I'm just going to measure this out in, why is that not working? Let's try that again. Let's measure this out again. So 161 days. Is how long that trend took. That was at a local bottom. This 2019, 2020 trend, 126 days. That's about 4 months. Of course, this one took a long time. You know, so even at best, let's say, just for comparison's sake, at best, you know, what if this takes about 4 months for this negative trend to finish out? That would take us to 120 days. That would mean sometime around March that maybe we could be in a negative trend till March. Again, we're just going, we don't have many data points here, but for the 2019 comparison, that's what we have right here. Could be shorter. Again, we don't have many data points to say for sure one way or the other. Moving on to some other indicators I'd like to take a look at. Let's go to, I want to, yeah, hash ribbons. Not really seeing anything. Yeah, we don't really have any sort of, it's crazy as a buy signal here. Curious what that's about. I'll be honest, I don't know enough about that indicator to say anything, so I'm just going to move on. And that's another little bit of advice. I don't like to, I like to talk about the indicators I know well and marry them together. So I think that's a good way to go as far as, whatever way you look at crypto. I'm on tradingview.com. Whatever way you analyze, use indicators that you can marry together. But yeah, this is the Ichimoku cloud. I have a buddy who uses this one a lot, and we hit the bottom of that cloud perfectly. And you can see we're hitting the top of one of these cloud levels perfectly. The blue area, the green area. That might say, maybe Bitcoin can test that 95K area, but are we going to start moving along the upper area of this cloud? That is something that my buddy likes to point out, is that how the clouds often hold these macro trends within them. I'm curious, what's the monthly looking like? The monthly is showing there's a lot of support right here, around 77 to 81K. But the lower end of the monthly cloud, did we ever get, we hit it a couple times. I'm just taking a look. This is 2019, it's 2021. Yeah, if we got down to the lower end of those clouds, that's all the way down at 50K. Not to not to freak anything out. People are going to be unsubscribing and be like, oh God, this guy's talking about 50K Bitcoin. I'm out of here. But yeah, I don't know enough about that indicator, but I do find it's a good indicator, and I need to learn more about it. The Larson line, we're underneath that. Being underneath the Larson line, typically never a good thing. This was the end of last cycle. However, something that I'm kind of waiting for, if we are in a 2019 style scenario, I want to see some chop up and above, or below and above the Larson line. Okay. We haven't gotten that yet. So if we are to get any sort of chop, even if Bitcoin does not break that 116K area that I talked about before on the liquidation heat map, where the next bit of shorts are stacked in, even if Bitcoin doesn't break that, if we start moving up and down this Larson line, I will feel more optimistic. But being underneath it right now, not the greatest sign in the world. But again, if we are to stay bearish, we look for opportunity, we look for confirmation, we look for discounted prices, so we can get really good deals. Love this indicator, the Mayer multiple bands. This showed that we got right down to that green band. This is like purely fair value. So if I were to make sort of a range, where is Bitcoin at fair value? The fair value price is at 81K, and we hit that again. That's where the 100-week moving average is. As far as the lower area of this mean or median zone, that's at about 60K. So if all of a sudden Bitcoin were getting lower, the Mayer multiple bands would show 60K. Back in 2019, we did hit the green line, and then the lower yellow line, and you can see how well this honors it. Even these tops, that was very euphoric back here. Last cycle, it topped somewhere around that red band. But again, for that 2019 COVID, it took us down to the yellow and the orange. For a comparison, that would be 60 to 42K. So if all of a sudden COVID 2.0 comes out, there you would get generational Bitcoin prices. Not that has to happen, but you see here how the tops get lower each time for this Mayer multiple band. So I would be looking at this orange area for a potential top, a euphoric top, and that you can see is in the low 200K area. I don't believe Bitcoin would get up here towards the 360K area. That'd be eyeing 200-ish K for a potential top. So again, shout out to the guy who brought this indicator up. Love it. And I think that shows us some good price targets up and down. We talked about the MACD before, the pi cycle, always a good indicator. And, the top, again, that's at around the low 200Ks. You can see how Bitcoin, when it's very euphoric, actually, I want to show you something here. These two indicators go well together, the bubble risk indicator and the pi cycle. Okay, you see how Bitcoin's above the pi cycle, and that's when it triggered when our bubble risk indicator was very high. We had that mid-cycle top. Bubble risk was, relatively speaking, pretty high. This euphoric top, again, in alt season, bubble risk indicator is very high. We had a pi cycle signal here. We did not get a pi cycle signal for the 4-year cycle top last cycle, so do keep that in mind. Ran into the pi cycle March of 24, and again, if we were to run into it, I think we would see the bubble risk indicator come up quite nicely. When that'll be, who knows? Just taking a look at the lower moving average, what Bitcoin tends to do when it's underneath it. You can see it can stay underneath it for a while. Back in 2019, when the Fed switched from QE or QT to QE, you can see how we chopped above and below. So again, I'm looking for some chop, or I'm hoping for some chop as far as Bitcoin in the medium term. Let's keep going down. RSI. I think the RSI is very important to look at on multiple time frames. You can see, remember the 2018 and the 2022 comparisons? You can see that's where the RSI was completely bottomed out. Bitcoin, the RSI, the relative strength index, has not been this low unless it's been at one of those major bottoms. So the RSI is very bottomed out right now. It could get more oversold. Do keep that in mind. But in a way, this is going to sound weird. I am happy this happened because the elephant in the room for 2025 was this triple bearish divergence in RSI. If you don't know what divergence is, that means the peak of the strength is lowering while the peak of the price is going up. So you can see higher prices, lower strength. There's a lot of people who, it was getting easy to ignore this as it went further along, but it's just kind of that ominous evil hanging out there. And I am glad we finally got oversold because now we can put this bearish divergence to bed. The RSI, it has diverged to the bearish territory, and now we just look for confirmation. So bullish divergence, you can see how the RSI goes higher even though the price goes lower. That's something we could look for. And as far as a 2019 comparison, I mean, this was just straight up bearish until we reversed out of there. So sometimes you don't get the nice divergence. You might just get straight up bullish price action. You might get a V-shaped recovery. You might get bullish divergence. Okay. Those are kind of the three major scenarios to watch for. So do keep an eye on the RSI. The monthly, yeah, we are majorly underneath it. So again, 2019, we chopped up and down from that thing. And as far as this RSI is concerned, I mean, you can see like we never quite got to that trend line. If all of a sudden Bitcoin were to kind of pull a reversal and get somewhere near that trend line, then I'd be taking a look at, possible euphoria and an alt season type top. All right, let's keep moving on. That was RSI. Let's go to relative volatility. Volatility is vitality, and I do like seeing volatility spike up. Let's go to the monthly. I mean, it's kind of coincides with RSI as well. But you know what? Like, I don't know about you guys, but to me, that looks like bullish volatility. And again, volatility coming into the market, that can be a very good thing. So is this showing us, I mean, we have a little bit of a lower high here, but overall, that's very macro bullish in my opinion. Are we getting ready to set up for a possible spike in volatility to catch everyone off guard? That would be something. And, if that were to happen, I don't want to be giving myself a pat on the back, because there's no indication that it will happen. But it would be funny if it did, just out of nowhere, catch people off guard. As soon as most people aren't paying attention to crypto and losing interest, all of a sudden, boom, volatility spike, bubble spike, 150K Bitcoin. these things can happen fast. When, by the way, being here in these cycles, when we get those alt seasons, they happen very fast. So do make sure you have a strategy where you know what to do as far as my clearest bit of unsolicited, non-financial advice. If your altcoin runs, take profits, please, for the love of God. Reverse Cutler's RSI, we never quite bottomed out yet. Now, bear in mind, this isn't always going to call the absolute lowest bottoms. Curious if we have any sort of difference here. Yeah, this is showing we could bottom out even further. But as far, I like this over the regular RSI. The regular RSI shows that we have really bottomed out. This one says we still have more room. So if we are to get towards somewhat of a cycle bottom, we're looking to go way down there. Let's keep going. Let's do stochastic. I like the stochastic on the monthly. And again, you can see here 2019, we were still elevated. Now here, as far as the stochastic, this looks like it wants to be oversold a little bit more. And I like when the stochastic shows a reversal or is flattening out. We don't have any of that yet. So no confirmation. This is still headed in the negative direction. I also like, by the way, pointing this out for Bitcoin dominance. We have RSIs and different indicators showing a downward trajectory for Bitcoin dominance. So going back over to the alt season, the money flow thing, there are macro indicators to show that Bitcoin dominance is now headed in the negative direction as well. So do keep that in mind. Again, as far as money flow goes, 2019, we are right here. Okay. We are now done with quantitative tightening. Let's finish with a couple more indicators here. And super trend. Yeah, we broke underneath the super trend. That's never a good thing. We break under the super trend. We just got a sell signal recently. Not a good thing. We did get a sell signal here, but that was the very bottom here in 2019. So again, it's not always a perfect indicator. Even in 2017, we didn't get a sell signal till here. Let me tell you, if you were in Bitcoin in 2017 and you wait for the super trend, you would have been already absolutely annihilated. I can promise you that. Altcoins were done as far as like the first week after the first week in January. So this can be sort of a confirming indicator. But yeah, we'll see. We'll see if we get sort of a 2019 scenario where it says sell, but then we just kind of get some chop. So something to pay attention to. And then let's do ultimate RSI. Always like this one. Again, that bearish divergence, we see that here. Now, ultimate RSI still shows that there could be more negativity to go. But again, 2019 monetary policy comparisons would say, it doesn't have to go that much further. Going out to the monthly, you can see that RSI, the ultimate RSI was very much elevated. We never got, to a trend line. What the heck? I flipped it. Oh boy. How did I do that? Let's get rid of that. All of a sudden, everything went weird. But yeah, the ultimate RSI, that is something to keep in mind. Hopefully it doesn't do that again. I want to pull this up and fix that. There we go. I don't know how I flipped. That must be. Yep. All right. Yeah, fat fingered the thing. All right, let's move on from the ultimate RSI. Any more volatility, Gaussian bands? These are ones people like as well. Yeah, that's showing bearishness too. I do wonder, is the monthly any different? Yeah, the monthly is showing, again, going to 2019, you can see how we ran right into it. That would be saying, low 70Ks. So something to keep in mind. There are some indications that the 70K range could be where we see somewhat of a bottom. All right. So anyways, I like to call it there as far as for the indicator special. Back to the moving average, we have the 50-week moving average here at around 64K as well. So, if Bitcoin got a lot more bearish, that's what I'd be looking for, that 70K, high 60K region. And with that being said, let's go to the comments. Are there any questions, thoughts, altcoins you would like to take a look at, or other indicators? Please comment those below. While I wait for your comments, I'm just going to go through some other charts and just point out some things. Do some quick TA. We have Bitcoin dominance here, and again, like I said, the MACD momentum is now flipped negative. So I want to see what happens. We have a bullish momentum flip right now, even though we're on the negative side. I want to see where this tops out at, because I'm sure Bitcoin dominance, it feels like it's going to spike up higher again, but we'll see. We'll see what happens there when it's done with its next move. Total 3, and actually let's keep on our MACD here. There we go. Total 3, you can see just like Bitcoin, MACD wanting to flip, but we need to maintain structure. We have the 100-week that we've tagged before, but the macro golden pocket from high to low, now I want to get rid of this, drawing a Fibonacci retracement, high to low, you can see the macro golden pocket is right where that 200 is. So if we get another flush in alts, I'd be looking at that area as far as looking at some deals. You can see Ethereum Bitcoin, that recently flipped bullish, so maybe we're going to get some chop here. Ethereum Bitcoin moves opposite of Bitcoin dominance, so something to keep in mind. As far as our large cap indicator, losing the 50, this large cap chart includes all the total alts except for Ethereum. And if we did that, and I'll show you guys that right here, if we included all the alts total, if we included all the altcoins outside of Bitcoin within the top 10, you would do total 2, so it's the total market cap. Excluding Bitcoin, you see ES, that excludes stable coins as well. Others is all the altcoins outside the top 10 divided by Bitcoin. This is a good alt season metric indicator. It is bearish right now, but if we, and I have a Fibonacci drawn here from this high to low, if we break that 200 week moving average in the 382, then we can feel better about this. But we are in this massive downtrend, and it does look like that probably wants to continue. Others dash Bitcoin. Yeah, is this one showing any bit of a sign of reversing? Let's take a look at the RSI. I mean, we're on the weekly here. You know, do we have some divergence here? I'd say there's some. Is it very strong? To me, this looks like the RSI kind of wants to bottom out yet again, and then maybe that's where our base forms. Going over to the monthly, I mean, that's very bottomed out right there. So what you'd be hoping for now is some bullish movement and for the RSI to start curling to the upside. Let's go to Tether dominance. Now, Tether dominance, we've showed this, the MACD possibly getting ready to turn over, as you can see right there, light green. So this is inversely correlated to Bitcoin. So when our Tether dominance, which is value of dollar, people go into Tether when it's risk off. When it's risk on, we see this flip. We see Bitcoin price go up. I'm curious what the RSI shows. I keep meaning to look at that. RSI very topped out, so we'll see if this thing starts to come down. I also wanted to take a look at USDT Tether dominance plus. There we go. Plus that dominance as well. Yeah. All right. I've taken a look at this before, but yeah, this is kind of in a channel here, and that looks a little bit toppish as well. So yeah. .dev.x. What's up, dude? Hello. Are you buying Bitcoin miners at these levels? Also, can I get your view on XXI? XXI, that is, let's go into XXI. So that is 21 Capital, which is formerly CEP. Now, all right. As far as, I remember looking at this because this, I will say, as far as some of the things I read out there, there are some positive things to like about CEP, now 21 Capital. This chart does suck though. I mean, that is just a massive rug pull. I would be looking at some confirmation and a base here. Again, you can take a look at some of the buy signals here. Just plainly speaking, there's a buy signal there, but overall, massive downtrend. Now that we're at these base prices, let's go to CEP, even though it's now, it's gone now. All right, I guess we're stuck with this. So yeah, there's like a merger or something. But as far as other indicators go, let's take a look at the daily. Um, yeah, this thing, it's looking very bottomed out, but I could see it bottoming out a bit further. It does have a market cap of 147 million. Um, so buying it here, is that not good? Here's here's my sort of I'm going to say the positive and the negative. The positive, yes, you'd be buying it at a massive discount. However, the price of this is this low for a reason. What is that reason? I'm curious about that. You can see, one of the reasons right here, just chart wise, you can see how this thing just rocketed up from $10 up to $60. It did the institution's kind of at $10. Okay. It did a massive 6x very fast, got very detached, and then it's just slowly sold off. So, here's the thing, .dev. If you like this stock, you believe in it, great. Is start looking at some of the indicators to show confirmation of, when is this thing done bottoming? I mean, there's really no point in drawing a Fibonacci retracement because it is fully retraced. So now we take a look at some of the other indicators. Let's start with some of the classic ones. RSI, it does look to me like we're getting a little bit of bullish divergence, a little bit, but that RSI is very choppy. Also, if Bitcoin is going to be continuing to be negative, then charts like these are going to be negative as well. So, everything crypto-wise starts and ends with Bitcoin, and Bitcoin is a very speculative tech asset. It is not quite in the digital gold realm as much as people want it to be. I think it will get there one day, but it's not there yet. Otherwise, it'd be moving with gold and not inverse from it. But anytime you get into more speculative assets in an already very speculative asset class, I'm just saying your risk is going to increase. So from some of the things I've read about CEP, now 21 Capital, there are some things I really like about it. And, if you love it, then you look at getting in at those prices. You look at good indicators to see, are you getting any sort of confirmation? We're just going through the general ones right here. But yeah, this MACD is very negatively diverged. So what we're looking for here is a flip of momentum. You can also see on some of these moving averages. By the way, just the 50 right now, the 50, it loves getting rejected by the 50, even the 100. So, those would be areas to break to say, okay, now we're bullish for sure. So yeah, is it worth a DCA here if you love this one? Sure. But I would ask you this, why is it down this low? Why did 21 Capital, CP, is it the merger? What is it? Why is it down this low? We've taken a look at Market Watch before. I don't know as far as, what the balance of this one looks like, or all the money underneath the hood. I would need to do more research on it. So I want to get back to your other question. Are you buying Bitcoin miners at these levels, Bitcoin mining stocks? I would want some more confirmation. So if we go to, Mara is pretty bearish. Right here, we're off log scale, but it's at the lower area of its channel. Like all these Bitcoin mining stocks, we need to see what happens, where it can find support. It's got to hold support here, between 11 and 10 and a half bucks. Otherwise, we could see this go a lot lower. I did bring up the 2019 comparison, and funny enough, 2019, where was the quantitative flip? It was right here, right at the 382, and Mara went a lot lower. So let's add that in here. And let me get some water. All right, so Mara, from the time that we flipped QD to QE, I mean, look at this. It still dropped another 70 some percent. I don't know if it would be that bad, but for comparison purposes, another 70%. I mean, damn, you're getting back to the lows, so I would be looking at more macro confirmation. Um, QT is done, but we're not seeing the massive amount of QE that would drive speculative tech. And so I do wonder, we have the IWM Russell 2000 showing bullish signs right now. Here we go. IWM. I mean, this thing's bullish. The question is, when is that going to turn for crypto? But as far as other mining stocks, um, again, I'd like some more confirmation. Iron, we have these dip buying levels. I'm not buying iron right here because it already ran, from this former Fibonacci range. If you weren't getting iron here at, anywhere around $6, $7, $5, it already ran a bunch. So, if you believe in the long term, this would be the start of a possible DCA opportunity. Again, there's no confirmation, but we are just coming out of profit taking areas for some of these mining stocks compared to accumulation areas. Cypher, it's running into a little bit of a ceiling there. Cypher did very well, coming from some of those prices like $2 to $5. I mean, yeah, great profits on Cypher, Wolf, and also some of these Bitcoin mining stocks are getting in the AI game as well. AI data centers, Wolf. I mean, it's curious. Some of these are bullish, so I'm not buying any of these right now. Mara is intriguing, but again, it's curious how some of these things historically sort of repeat. Riot came down from that 618, got rejected by that 618 up there. Riot and Mara are older mining stocks. So, Mara is intriguing. Maybe some of the lower ones like Hive, and maybe 21 Capital. Yeah, I'll take a look at some more 21 Capital research later, just because your comment. And then you want MSTR as well. So, MSTR, I think it's a little bit different than Bitcoin, even though people want to compare it to Bitcoin. There's been a lot of share dilution since the last cycle, and it still ran up huge. But right now, this is a very bearish trend, and it is hanging on to its 50-week moving average by a thread. You see that's a doji, that's undecided. That's what dojis mean. So if this thing can decide positively, then I'd be taking a look at this former low area here, as well as where the 100-week is. But it's not the worst structure, at least to the side here. Next, I'd be taking a look at 100. If MSCR goes deeper than this, let's take a look at some of these monthly moving averages. So this is 2021, sorry. 2021 came down to the 200. You see it just blew right through all those. It held support at the 50. I kind of like this monthly moving average outlook, not going to lie. If all of a sudden, like what you did with Mara. Oh, thank you. Yeah, man. I mean, before I go back to MSTR, any of these Bitcoin mining stocks, any crypto asset, like, why do you like it? Why do you believe in it? And then when you have a strategy, you got to stick with it, even when it's bad, because, if you were a MicroStrategy fan and you see it get mega bearish and then hang down here and you're buying it at 21, you reap the benefits of getting in those assets when things are really bad, when the sky is falling. So similarly, I do like the monthly perspective more than the weekly. And also the weekly is about to be lost as well. So we would have to switch to that. But as far as the monthly goes, if all of a sudden we see a repeat of something like this and it just kind of drops, the 100, I could say compared to last cycle, the 100 could hold up a little bit better because we have some structure there. Okay, but the 200, The 200, we have more structure. So if MicroStrategy ever came down somewhere around $70, I would have a very hard time not considering some MicroStrategy. Hi, what about BitDigital, BTBT, and Solana? I'm not familiar with Solana. Is that if Martin? It's great having you here, Martin from Poland. If Solana is an altcoin with the market cap in the tens of thousands, I'm not looking at it. I don't shill those coins on my channel, so you better pray. Let's see, buddy. Is this what you want me to look at, or are we talking a stock here? Um, let's take a look. I'm like, I've never heard of SLNH. All right, Martin is saved. 188 million. Cool. He's saved. Let's take a look at Solana. I'm so happy this isn't an altcoin, but it might as well be. My God. So funny enough, we're on the monthly. You can see that 20-month moving average. It's going to be a bear. And then if it gets through it, we could see some comparisons. Man, look at that massive sort of accumulation. But overall, I mean, this thing is, I mean, you can see it right here. Yeah, this thing is massively in a sort of like massive bad negative channel. So you're at the lower end of that. Could it keep chopping down lower and lower? Yes. And then at best, I'd be taking a look at somewhere along the upper ends of that channel. Could it 100x? It could. Why would it ever do that? I don't know. Let's go to the weekly, and let's get rid of this. It's going to get in my way. Weekly, yeah. I mean, it's very separated. Watch how it just dies and follows this 20 week. A little bit of bullishness. Now the 50 week is the line in the sand between being bullish and bearish. Went down further, had a little bit of a fake out. Now we're underneath the 50 week again, and we're kind of wedging between the 50 and the 20. A little bit of an undecided doji. Yeah, if we drew a Fibonacci retracement, I bet, yeah, it's going to be the 382, isn't it? Yeah, there you go. That's why you had that rejection right there. So this thing is negative. This thing is bearish. Don't love it right here. But if you love the research on it and you think this is something I can run, I do not like charts that look like this. I'm just saying. And as far as BitDigital, BTBT, yeah, this one still chopping sideways. Still chopping sideways. The MACD, everything else confirms that. The lower area of that channel is in the higher $1 range. But I think BitDigital, it's at a level right now where, the hardest thing to do during these alt cycles or these Bitcoin cycles is to pick the right altcoin. If you pick the correct crypto asset, it doesn't matter, and you're kind of pinching pennies. You could wait and get maximum value, but if you believe BitDigital will run as Bitcoin runs further along during this cycle, okay, let's go by halving comparisons. I think this will show it better because this cycle is just so mute. If you believe there's a further top somewhere along this cycle, and I consider cycles being between the halvings, and you believe that BitDigital is one of the correct assets to pick, then there you go. I don't think you're getting the worst price. Then I would ask you, where would you be taking profit? At a 2x, a 3x, that'd be the golden pocket. 4x, or beyond that, that'd be more than 4x. It's almost we're getting into 10x territory as we get up near former all-time highs. So yeah, make sure you're not being a total gambler, but where would you be taking profits if this is one to run? So yeah, I like where some of your guys' heads are at, though, as far as like, hey, some of these crypto assets are going to be at very good historical discount ranges, and if they are one of the ones to run, which they've shown to be in the past, you can make some really good money. And so, yeah, imagine getting BitDigital at 50 cents and then it runs up to $32. I mean, that's absolutely an insane, almost 7,000 profit. So, what's up, man? Do you think DeFi is even worth keeping on the radar next year? Uh, Surveillance 2656. Thank you for being here first. Do I think DeFi is even worth keeping on the radar next year if we get more rate cuts in QE, improving risk on sentiment? I think as far as the message I've been seeing out there in the cryptoverse, a lot of people are talking about QE like it's going to have an immediate impact. And I don't know. The one thing I would say to agree with those people is that Ethereum Bitcoin, this cycle compared to last cycle, flipped to being bullish again and bottom before QT ended. You can see when QT ended last cycle, that's where the altcoin market bottomed against Bitcoin. Okay, and then we went up from there, but we had massive QT early. This time we've sort of front run that. So people are saying, hey, QT's done. Now Bitcoin can go to 200K. I don't know. But as far as, is DeFi even worth keeping on the radar next year? How can I put this? Overall, no. I don't believe DeFi is worth keeping on the radar for next year. But if there are any DeFi crypto altcoins you really like that you think can still have momentum during an alt season, during a QE type of alt season, then these things can still run. Maybe not to new all-time highs, but they can still do well. In 2021, there were altcoins. Actually, let's go here. There were altcoins that did very well in 2017 that did not make new all-time highs in the alt season in 21, but still did very well from those lows. So you could still make some money. But as far as altcoins I'm looking at, I'm considering the AI narrative altcoins. We're in an AI bubble, as reflected by the Shiller PE ratio. So that's something I'm looking at. Some of the AI Bitcoin mining stocks. So yes, QE improving risk on sentiment. Yeah, I think, we're already risk on. We can even see that with the IWM Russell 2000. The stock market is risk on. Now we're waiting for the crypto market to catch up. Servalin says, and does the midterm year matter at all? Like, would Trump try to pump the market overall to stay favorable? I agree with you. Going back to USC BBS. Okay. And by the way, this is not a pro-Trump, anti-Trump thing. I'm just trying to speak in facts here because I realize all of you out there, we're going to have different conflicting views. Here's what I'll say. The election was later 2020. Any politician knows you do not get reelected in a down market. That's why the Democrats did so poorly last time. They really tried gaslighting the whole country, saying, hey, the economy's fine. Biden is mentally fine. Both those things are true. And again, I think they're all crooks on both sides. That's where I stand. But you're not going to get reelected in a down economy. And we do have midterms coming up. Midterms tend to be the weakest year for crypto, for stocks. As far as presidential cycles, I've shown you guys a chart many times before. The midterm year has the lowest average returns on average. We also have the stock market, as far as a secular bull run, very high, very elevated. What I am looking for in 2026 is volatility. Now, volatility can lead to big spikes down and up. But my expectations, I don't know, you just got to play the market that's given to you, but you can see, Trump wasn't afraid to authorize massive QE back in 2020. Now, we had COVID. We've all heard him say he wants more rate cuts. We're getting a new Fed chairman. They're going to be appointing new people to be on the Fed committee who are going to be more pro rate cut, more QE. And so with the market, what I will say, bullish wise, the market's already this high and they're going to introduce all these other things. Like, in my mind, I'm thinking, isn't that going to reaccelerate inflation? That's something I think about. And the stock market can front run, the economy, a recession eventually pulling these metrics down. So I don't have a solid answer for you. It's kind of one of those we'll see. But if unemployment continues to go up, how much? Here's a question. I think it's going to be a new question moving forward. How much unemployment is tied into companies doing bad versus companies just changing out jobs for AI, for robots and AI? I think that is going to become more and more the case moving forward. And that's why I believe, for a big reason, why I think this bubble can get even bigger than the dot com bubble, because it can replace jobs, drive unemployment, and companies can still make more profit. So we have never had that type of scenario before. But yes, I do think Trump is going to want to do those things. Something to keep in mind, though. Let's go to. Um, I don't want to talk about this for too long, but you asked a very good question. I mean, this is one of like the things to keep an eye on. Um, let's let's do this. I want to change colors here. There we go. Um, when the Fed is cutting rate cuts large and fast, historically, that has been when something in the economy is broken. So, I worry about that. They want to cut by many more basis points. Like, is there something broken that we're not aware of yet? Yeah, we'll see. So let's keep moving on. But great question though, about the midterm year. You didn't mention how long you could see MSTR go. How long I could see it go down or up. Thank you very much. You're welcome. Dot dev. By the way, this is just the S&P in the background. That would be a bullish thing. Like, hey, MSCR is very detached right now. How low I could see it go. Um, well, I kind of talked about that. Um, you know, these would be the levels to watch for as far as 70, these moving averages right here. I would take a look at it right here. I think, in my opinion, this would be an area to look for the low right there at around 70. Could we get some wicks down here, to 40, 50? Sure. But that 200 month moving average, last cycle, that's what held on. Last cycle was the 200. Yes, it wicked below, but yeah, I would I would eye that. If this 50 doesn't hold, I would be eyeing here. Again, we might wick lower. What's this indicator called? This is just your moving average, your EMA 20, 50, 100, 200. And I don't like moving averages by themselves, to be clear. I like to marry this with other indicators. One bit of data, we need more than that. We need lots of data to agree with each other, macro and economic data too. So yes, the red is the 20 moving average, the orange is the 50, the light blue is the 100, the dark blue is the 200. I think if you combine this with Fibonacci, with your RSIs, you're looking really, really good, as far as those are concerned. But yeah, as far as, let's fib this thing. Why not? As far as low to high, and let's make sure it looks like we're on log scale, but I always like to double check. Um, yeah, you can see the 382, that would be around that 100-month moving average. By the way, that 382, 100-month, and then the point 0.5, 200-month kind of down there. So yeah, I'd be watching those fibs as well as far as pullbacks are concerned. It tested near the 236 pullback, and now we've gone through that. So yeah, this area, by the way, the 382 at 130, that's a very curious area because you see all this support, that former high. I'd be watching to see what happens at 130, whether or not it remains bearish or not. Anyways, guys, I'm going to wrap it up here because my football team is going to be playing here shortly. Thank you so much for being here. Appreciate all you guys, all the support. I just got another check from Google, from YouTube, and that's thanks to all of you. So even though Bitcoin has been bearish, even though views are going down overall, which is fine, I want to bring you the same effort and energy regardless. I like doing this for myself as far as tracking my favorite crypto assets. And it is fun to do this with all of you as well. But without all the viewers, the likes, comments, the subscribers, I would not have gotten another check. It's just a little bit over $100, but that's going to go towards a nice Christmas or New Year's dinner with the wife. So thank you very much. But yeah, with that being said, everyone enjoy your Sunday and have a fantastic week. I'll do the Bitcoin macro analysis video like I always do on Monday, talk about mining stocks Tuesday, and we'll do another indicator special. You guys got a preview of that on Wednesday. It is time to do an update on that. So thanks so much. Have a great day. Take care.